Hey guys, Nomadar here, again you're with us in the traders. Today I want to talk with you about why not trading binaries, forex or options, alright, or options trading. Why? I'll explain in a few minutes, so stay with us. Hey guys, Nomadar here, again you're with us in the traders. Today I want to talk with you about why not trading with binaries options, with regular stock options, or with forex, of course, CFDs and etc. First start and say that I'm a stock trader, right? Penny stocks, long-term stocks, FANG, S&P 500 stocks, right? So I know everything about stocks, which one to buy, at what part, why to buy it, why not buying the other one, how to handle the competition, which one to buy. You know, if like you have Alibaba and Amazon, why to buy the first and not the others? All right, so because of my greatest experience with stocks, so I can understand stocks very well and understand the meaning and when to buy and why to buy it and when to sell it. Also, it's very important, of course. So why I'm so much against binaries, options, forex and stuff? Well, first I'll say that options have something good with them. All right, options are good when you try to hedge your position, right? If you're taking a long position in let's say some bond or in some stock, all right, so you can hedge yourself, all right, like for your risk management by doing short on the opposite stock or the opposite bond, just to hedge yourself and manage your risks. But this is for more advanced traders, and this is in my course, not something that I can explain here. I can, but it will take too much time to understand how you manage your risk. But why it's smart to manage your risk the other way, it's, well, also something for other videos. But why I believe that stocks are better than options, than binaries and than forex? Because when you buy stock, you have actual asset, all right? You're not buying an options, you're not buying an idea, and you're not buying a dream. When you buy a stock, you have something in your hand, and you can decide if you want to sell it or buy more or hold it, depend on you. When you're holding an option or a binary option, which is also an option, but a binary option, not a stock option, well, you're also in a position that your asset can fade away. Because stocks are not in time frame. You can buy a stock and wait with it and everything is okay. But when you buy an option or a binary option especially, you have a time frame that when it ends, you stay with nothing in your hand. Maybe it's good, maybe it's bad, but the asset is fade away. Also, it's like that with CFDs, which are forex, contracts on forex, that I don't like. So the difference is that stock, it's actually an asset that you can handle. You can decide to, if it goes down, you can decide to hold it and you will believe that the company will get better, so you can sell it in the future. But if you have an option has a time frame. It can fade away in any sec, right? Which means that if it goes down and you'll believe it can go up, well, you can't just wait and see what's happening. You'll have to understand that if it's not goes on and work fine, it will fade away. So you need to hope that it will go up, but in a time frame, which probably won't happen because everyone else will understand that the time frame is going to fade away. So everyone will pass to another stock or another option or etc. Regarding forex, which is also sort of an asset, right? If you're trading forex, it's also sort of an asset because it's actually coins, it's exchange coins. But in most forex trading, it's not that you're holding one coin and wait with that, all right, until it goes up, until it goes down. Because if you're holding $1,000 and it parallel to the euros, all right, it means that the change need to be huge in the coins, so you'll see some good profit, which is something that not happen. All right, the difference between the euro and the dollar can be 1.2, 1.3, 1.1. This is the ranges. It can't be, and which it means it 10% up, 10% down. That's the ranges. It's not gonna up 100%. It can happen. It happened before and it probably will happen in the future, but it's very rare. So to make money with this kind of asset like Forex, you need to be very, very, very leveraged, right? Which means that $1,000 will be leveraged 10 times or 100 times. It will be like $100,000. It means that your money can fade away like that, because the broker that you have for Forex closing your position in a sec if you lose all of your money. Which means if you have $1,000, right, and you leverage it 100 times, meaning that even 1% down will delete all of your $1,000, and it can be like that in a sec, and you'll stay with nothing because the broker will close your position, because this is what you put as collateral, and it will fade away. If you buy stock, it can go up, it can go down. You also need to be careful, of course, but you also need to understand that if it goes up or down, you'll still have it. You're not gonna lose it. You'll still have it in your hand. It's very important. All right, so as I said before, binaries and options can fade away like that. Forex, if you leverage, and you will have to leverage yourself, can fade away like that. Stock can go down, can go up, can crash, it can blow up to the sky, but you'll have the asset in your hand. It's very important for you as an investor, as a trader. It's very important to understand it, and I believe you can. If you'll join to me, I'll explain to you everything. So thank you for your time. I'm Noah Madar. Please subscribe to the channel, please like the video, and let me know that you understand. Bye bye.